G'day, folks, and welcome to our weekly wrap. Adam Renouf and Steve Maynes. G'day, Steve-o.
Ads, good afternoon.
Mate, I've got an interesting one for you today.
Yeah, hit me with it.
Cryptocurrency. Now,
Never
we
heard.
can't provide advice on it. It's an interesting thing, but geez, there's some different opinions on it.
Oh, there sure is. I think it's an age-based thing too. You got the young people who believe this is the way to go.
Yep.
And then you got the rest of us who aren't sure.
Well, let me give you some data.
Please do.
So, cryptocurrency lender Celsius Network was advertising yields of 17% right up to mid-June, when it froze its withdrawals and then filed for bankruptcy in New York a month later.
Ooh.
Blah, 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 blah. As we scroll through, there went my life savings, my pension. I'd worked 30 years to save this money.
Yep.
Blah, blah, blah. Put it this way, it's that bad. They've got Lifeline, Men's Health, suicide prevention, Beyond Blue, all the things at the bottom. So this is obviously coming out of the US, but there was about 300 Australians affected by it as well. And there's 300,000 active users, and there was a $1.2 billion shortfall when they filed for bankruptcy.
I mean, really, it's a bit of a Ponzi scheme.
Well, it's
that particular
one. I'm not even going to comment on that. Let me go back to this. So I've done a bit more research. ESG, I'm all over the show with this, but researchers estimate that Bitcoin mining may produce as much carbon, so 65 megatons of carbon dioxide, per year, which is comparable to the annual emissions of Greece.
And this is all due to this coin mining business?
Yeah, because they sit there in their tidy whities and they're doing all their mining and all that sort of stuff in the wee hours of the morning.
Well, I believe that these supercomputers that take these enormous turbines to make them work, and I've heard the same thing, that
unbelievable.
The footprint on emissions is enormous.
Absolutely right. And so I'm going to give you some data, right? Bitcoin compared to Google. So we know this stock market, and you've probably had some clients. I've had clients ask them what's going on in the market. Market's been kicked in the teeth, right?
Yep.
So September 11, 2018, Bitcoin was worth $3,662. On the 14th, and I've tried to get the dates fairly similar. On the 14th of September, Google was worth $58.90. They've done a split and all the other sorts of things, but basically about $59. 12 months later, Bitcoin's gone from 3,600 to 10,300. Google's gone from 59 to 60.
Yep.
12 months later, Bitcoin's gone up by about $600, say to 10,900. Google's gone from 60 to 72. 30 of August 2021, Bitcoin has gone from 11,000 to 52,000.
Right.
The same time, Google's gone from 72 to 142. So substantial. And the relative peaks I could find is about the 8th of November 2021, Bitcoin was 65,000 from 3,600. Google was 148 from 58.
Yep.
So substantially bigger growth out of Bitcoin.
Sure.
On the 1st of August this year, Bitcoin is worth 23,000. So it has been 65% slaughtered.
Yes.
Where Google in the same time is down to $118, so down by 21%.
So you can just see that it's a business that is producing the income, being Google. Yep. And it's the slowly we build our wealth, not this trying to blast out. Speculative,
absolutely.
And what people are doing. I mean, look, I may have mentioned this to you earlier. It's a very, very quick story about someone who do know who decided to do a Bitcoin course, or a cryptocurrency trading course.
Yep.
And put in 25,000 and turn that into about 110 in about 6 weeks. He then decided to put in all his superannuation savings. It's now worth about 30.
Oh,
300 into 30.
Wow.
And that's his retirement savings.
Yep.
So it's a bit like a punter or a gambler getting that early win.
Yep.
And they kind of think that they've got the invincibility about them.
Absolutely.
And I was shocked. I've got to tell you, I was absolutely astounded. Look, if people want to have a go at Bitcoin, for sure, but you just minimize it to a very low percentage of your portfolio wealth or overall wealth. Not, you just might put in 5%, maybe not even that much.
Yep. And if it's out of pocket, it's your discretionary spend, right? So it's no different if you're going to the casino, if you're going out for dinner or whatever.
Absolutely. And and the thing too, it's a good subject you brought up, because the other day I was driving down the road and a black shiny Ferrari, brand spanker, drives past me. Guess what the registration plates said?
Bitcoin?
Crypto.
It
had crypto with a K. So It probably suggests that crypto with a C was taken.
Unbelievable. Now, again, done a little bit of research. In the US, it's a lot more substantially regulated than it is here with the crypto exchanges and those type of things. But crypto assets are technically come under ASIC because it's a financial product.
Yeah, that's right.
However, the Australian financial regulator, APRA, has set a tentative goal of 2025 for its framework to be effective on cryptocurrency. So APRA's not even in control of this beast yet.
Yeah, that's right.
So, and look, we're not saying don't do it, but like it's not, if it sounds too good to be true, it normally is, right?
Well, that's right. I mean, look, experience has taught us one thing, that, there's no quick way really of making, like, I shouldn't probably, it's unlikely you're going to make a lot of money out of these very, very highly speculative investments. It's very rare. It does happen. I'm sure we all know someone who knows someone who knows someone who made. But majority of us, and this is a common thing, as when you talk to people about the share market. As soon as you mention the word share market, people think of speculation, risk, loss, and it's all because of this sort of stuff.
Correct.
Types of investments that are highly, highly speculative. Not like when you look at the companies like you just mentioned before, Google. They're strong companies with strong balance sheets, produce fantastic income streams every year, and that's what really is what the value of the business is on its ability to make money.
And people like us are basically dependent on it.
Without it, what would we do?
Correct.
So look, I mean, the speculative investing, I just steer right away from, and with all my clients, and it's just more mainstream, and I think that's really an area where you need to stay in.
Yeah, absolutely, mate. So if we can use your catchphrase about market turmoil, what do you say?
I just say, ignore the noise and stick with the plan.
Yeah,
you won't go wrong.
Absolutely right.
Hey, we've already seen in the last few weeks a bit of a market, small recovery.
Yep.
So these things happen, and I just keep saying, I was saying to some clients today, that just focus on the dividends and the income. That never changes. So right now we're going through turmoil. The banks are still making their billions of dollars a year profit.
Absolutely.
Yes, the price will be a bit bouncy over the next few years, but the dividends will not be. We've got to focus on that.
And a wise friend once said to me, there's no such thing as a get rich quick scheme, but there certainly is a get poor quick scheme if you go into the wrong one.
Oh, absolutely. And like my client or my person I know, a fool when his money is soon parted.
Absolutely right. Absolutely. Mate, Steve-O, thanks for your time. We look forward to having a catch up again next week.
Look forward to it. See you then.
Cheers, mate.